Every trader trade his directional bias. Means before taking every trade, trader must know, or he should have this bias that where price is going. Most importantly, he should know that price may not go beyond this level, it may not go up beyond this level, or it may not go below this certain level. And that's why support and resistance and identification of support and resistance have very good importance in trading. You might have heard from many analysts that this is support level for this stock, this is resistance level for this stock. And what is the meaning of this? When somebody says this is support level, it means there is less chance that price will go below this level, or if price comes at this particular level, more chance of price being reversed from this particular level. So let's directly go to screen and see. We'll see what are support and resistance level and how to mark those. So I am taking you to screen directly. Now let me mark a chart here. Okay, suppose, see, this is price chart. Okay, see, this is uptrend chart, or we can draw anything like this. Okay, okay, this is our chart. In this chart there are certain reversal points which we can see. These reversal points are, I am marking few of those. Okay, I marked few of the reversal points which are high points. Now what are these areas? These where price has come and reversed, right? So what is significance of these reversal points? When price started from here, price started going up, right? So buyers were in control, so buyers were thinking that price is low and buyers were dominant, sellers were weak. So when buyers are dominant and there are more buyers, then what happens? Price goes up. But when price approached this point, when price came here, the perception of buyers changed, and what buyers think now is, okay, now we bought this, but this is expensive now. And what sellers think here? Price is expensive, we should sell. Okay, or those buyers which were already in stock think that price is expensive, now let's sell it. So now buyers are turning into sellers. So this is the point where sellers are dominant now. So when sellers are dominant, what happens? Price starts moving down. But when it comes down, if you see these points, what are these points? Where buyers again came in. Okay, because sellers pushed the price down, but then at this point buyers came in. Now buyers, at this point, buyers started becoming stronger than seller, because earlier here sellers were strong, so they were pushing the price down, right? When price came here, now the sellers thinking is changing. Now sellers want to exit their trade, means buy. So sellers are turning into buyers here, and new buyers are coming in who are thinking that price, this is cheap price, low price, so at this price we can buy, and they are again pushing the price up, right? Now these points where buyers became weak and sellers became dominant are called resistance points. These are all resistance points. Every point is resistance points, because at this point the reversal happened. So these are resistance points, okay? And so resistance point is a point where buyer becomes weak, seller becomes strong. And these are support points where sellers became weak, buyers became strong. So buying came in at these particular points. Fine. Now let's see these things on chart, how they work. Okay. Before that, I will just explain you one or two concepts. Okay, let me clear the screen. Yeah. Okay. Now see, what generally happens is, if price is going up, right? Suppose it is in up move and going up like this. Okay. So generally what you will observe is, see, you already know that this is resistance point, this is resistance point, and this is resistance point. So price was going up, at this point sellers came in and this became resistance. But then again buying came in from this support point, and buyers successfully pushed the price up than the previous resistance level. Okay. Now price has broken this level and moved up. Again, after some time, sellers again came in and they thought this is expensive, and they started selling. So prices started coming down. But if you observe, prices came to this old resistance level and it reversed from this point. So this is now support. So on charts, many times you will observe this fact that old resistances will become new supports. When price breaks above the old resistance level, the old resistance level now act as new support level. This happens many times. Okay. Even if prices are going down, if prices say going down like this, then also you will observe that this is old support level, but when this level is broken, price came down, the same level now here act as resistance level. Fine. Now let's so this is basic terminology about support and resistance. Now next what happens is, if price touches certain level, more than once, we call it key level. Okay. So now this, see here on this chart I'm showing you, this 1 2 3, right? If price touch a level 2 times, then this is now key level. Okay, and key levels will have more importance. These we will see in the next session of key levels. In this session we'll only see support and resistance. Okay, now see here, price turned from here. So watch this area, price went till here, this is now resistance, but when this level has broken, price came here and took support, and if you see, this is same level. So old resistance turned into new support. This is weekly time frame chart. See, in higher time frame chart, levels are strong. All these concepts will go in deeper in key levels session, but in this session we'll just understand basic concepts about support and resistance. So why support and resistance are important? Because see, whenever we take trades, we must know that what are probable reversal points, and support and resistance provides the probable reversal points on the chart. Now if price is going up, suppose if price is going up from here and I want to buy, see in this particular zone here, I thought that prices are going up and I want to buy. Then if I buy, the resistance level is very nearby, so I won't earn good profit. Okay, so I must know that where are support and resistance level. Second important thing is, if see this is a resistance level, right? This is a resistance level. When this level is broken and prices went up, I can take trade here and my stop loss can be here. So support and resistance are very important in order to manage risk. So they are best for risk management. You know exactly where you should have your stop loss placed, right? And we generally trade around the key levels. Key levels are strong support and resistance levels. So most of the time our trades we take near the support and resistance levels, and if you observe, when this resistance level is broken, prices moved up very quickly. So these support and resistance level provide us most probable areas for good trades and good breakouts. That's why the concept of breakout also we'll see in coming sessions, but so far understand that support and resistance levels are very important. And how you mark these levels? You just mark reversal points. Wherever there is reversal, you just mark those points and then connect those points in every time frame. Okay, so also there also there are different kind of support and resistance. Let me explain it to you. Let me clear the screen first. And okay, on this chart only I'll go on lower time frame. So I am on the daily time frame chart. Okay, Okay, now okay, let me quickly give you example about what I earlier taught you. This was resistance level, but when price has broken this level, now see, this is new support level, right? This is lower time frame, and I just saw, so I gave you this example. But there are different levels, different type of support and resistance level also, and we call it trend line support or trend line resistance levels. Okay, so now I am drawing a trend line from here. Okay, this is one trend line. I want to draw other trend line also. Okay. Till here only I will draw. Okay. Now just observe this, and trend lines work very well many times. You don't need to draw it on both sides. I have just drawn it to show you. Okay, you don't need to have this levels drawn on both sides. I have created channel here. This line is called trend lines. Both of these are called trend lines. Okay, because if you see the trend, it is in between these 2 points. Now see, this reversal point, this reversal point, fine. Now when third reversal point happened, and if I draw line connecting these two and extend, we see that price reversed from this trend line third time. Even when prices went further, we can see that price turned from this trend line. Again price turned from this trend line. Okay, this is called trend line resistance. These are all resistance points. Okay, so these are called trend line resistance. If you see here, these are support points where price reversed from these points whenever price touched this. Okay, and if I connect these points and extend it, you can see that price has reversed from this level and went up. These are support points and these are called trend line support. Okay, so this is another concept. This is also useful. You can trade the trend line, like you will buy when price touch a lower level, you will sell when price touch upper level. This is channel. We are trading channel here. Or if suppose upside resistance level is not fixed, there is only support level, then you can trade only support level also, trend line support level. And many times it's possible that there will be only trend line support level proper, but upside it sometimes it go up too much, sometimes it stays low, like that. Means it is not mandatory that there should be channel always. There will be only one level also. So more of these we will see when we will learn about chart patterns, candlestick chart patterns. Okay, so thank you very much for now. Please like this video, subscribe to our channel, and thank you very much.